Welcome to Global Switzerland. Swiss Company Partners Group is one of the biggest private equity firms in the world with some 78 billion US dollars in assets under management. Its co-founder is now with me to talk about his passion for impact investing. Great to have you here, Urs. So first of all, how come this passion of yours for responsible investments?
I think it's, I have been very lucky in my life. I built a company who has been quite successful. I personally don't have children, so all my wealth will go back to society. And then you start to think how you want to do this. So there are different ways, charity, but I'm as an entrepreneur, I'm very much convinced that this should be through investing, because if something makes money, it's sustainable. And that's why I started PG Impact, that's one part. But at Partners Group, it's a long history that we like sustainability. We were the first private equity firm underwriting the PRI from the UN many years ago in 2008, and have always, but then, I mean, you cannot just sign for it, you have to do it as well. That's why we have built up a pretty big ESG group in private equity, and now as well are looking for sustainable investing.
And when did you get this idea, or when was this moment, arriving and you thinking, I need to do something, I need to have an impact with my investments and with my wealth?
Actually, our head ESG showed me some 6-7 years ago a so-called solar note where you finance these solar lamps for the poorest of the poorest. From a company called Sunny Money, and I asked him at this time, he asked me for, I don't know, several $100,000, 7% coupon, 2 years, bonds, and I asked him, because in my head I asked, is it charity or is it investing? So I asked him, what's the chance that I lose the money? I said, you don't lose the money. Do I get my 7%? Pretty high chance to get the 7%. So suddenly this moves from charity, philanthropy, into investing. Yes, it is in Kenya, it's a high risk, I got this 7%, in the meantime I have done this investment, I got all the money. At the same time we were actually financing a big Caffè Nero, the mezzanine rollout in Europe. Great entrepreneur, but you have to ask yourself, do we need another coffee shop in Zurich or in Berlin? Yes, they take market share away, so yeah, you have to ask yourself, should your money not really create also something for the world?
And this must feel very good, right? So basically you have your financial return and at the same time you help the environment and society as well. So it's good for your heart and for your brain and for your wallet as well.
Yeah, I would say, yeah. It's good for all of it. I'm seriously not really doing it. I think you can do something for the world, but you should do it entrepreneurial. That's I'm an entrepreneur. We are Partners Group, we are entrepreneurial. If you're a private equity investor, that's all you do, day in, day out. And if something has a return, it's sustainable. It will stay on. This is why I like this as well.
So you mentioned you got in touch with impact investment for the first time some 6 years ago. What kind of new and different approaches would you say are you yourself and Partners Group taking when it comes to comparing with peers?
Also, we have two areas. One is PG Impact, that's deep social impact. That's what I'm talking about now. So there we do energy. That's the lowest, the poorest of the poorest that we try through microfinance, energy access, education, agriculture financing and so on, to bring them to the next level, to bring them out of poverty to lower middle class, put it this way. So that's an own team, but it's completely, Partners Group gives all its knowledge, its internal way that we do investing. It's an institutionalized way of impact investing, which there are not so many around today.
And there are so many sectors of impact investment, right? But you really focus on solar.
No, we do all 6 sectors. So the first one is a global setup, all 6 sectors, because the problem you have is the returns, like the solar note, 7%, that's fine, but it's Kenya. So you have currency risk, you have political risk. So you need to diversify. What I learned is the only free lunch is diversification. So we want to diversify this PG Impact Fund as broad as possible. So that's the impact side. Then at Partners Group itself, we have now launched this PG Life, which is actually investing in the Western world, in renewables, healthcare, education, etc., following the 17 Sustainable Development Goals of the UN. So we have an own board who actually says yes or no to investments that we do, that they are touching these Sustainable Development Goals. And also we are also following this and making a report afterwards.
And this is a $1 billion private market strategy. Are you planning to stay on that level or boost funding for that as well?
That we will see. I mean, the demand is here. It's different type of people. You see now out of the institutional side that more and more institutions, Swiss Re, the big Dutch pension plans, the Norwegian pension plan, they all start to say we want to see only sustainable investing.
But is this, at the end of the day, just for marketing purposes and corporate social responsibility, or is there a real commitment?
Talking for us, it's a real commitment. I mean, we have an independent board who actually verifies the sustainability. It is, on the other hand, it is a normal deal flow that we have at Partners Group anyway, because we do a lot of sustainable investing, but you take then the glasses and look through, is it really touching some of the sustainable development goals? It's not just the gimmick. I think if somebody just doing, we call it like greenwashing or whatever, that has very short legs. It's bad for your reputation if somebody comes afterwards and says you're just doing this. And to be honest, I mean, the fundraising is not the problem that we have today at Partners Group. It's more the investment side. That's in this environment more difficult part.
And greenwashing, as you mentioned, that's a huge problem. A lot of fake products out there as well. So you do need a due diligence process, which requires a lot of people, a lot of money as well. So not everybody can do it. Some of the small players might not be able to cope with that.
That's true. I mean, that's why you see that more the bigger players are actually going into this sustainable investing. And it's a big theme now also for the public asset management firms, sustainability. There are many sustainable funds. There it's more a negative selection. You say this company does better, Exxon is better than Shell or whatever reason, but both are not so good for the environment. I think in private markets you can really pick companies because we choose what we put into this fund. And we take ESG, as I said, since many years very, very serious and have lots of impact. Like we had a Fermat, the big company for restaurants or canteens in the Netherlands. We were reducing food waste a lot by putting in, we had to first write the software that each canteen person knows when the weather is nice out there, they order more salad, and vacation, they order something else and whatever. But, you know, we take this serious. You pre-invest first. At the end, it's coming out as higher returns for us as well, but we have less food waste.
As there is such a huge number of players out there in the market as well, and also small companies tapping into impact investment, do you see any consolidation trend? And are you at Partners Group looking for acquisitions as well?
Normally we don't like acquisition. We have been growing Partners Group out of our own. We have our own culture developed, so acquisitions is usually not our thing. But you're right, there are like the median for, like I'm talking social impact, deep social impact. The median asset management on assets under management, I think, is 90 million. So if you have 30, 40 million, how can you pay a decent due diligence team? It's kind of difficult.
The global impact investment market reached some $23 trillion by the end of 2016. What is your outlook for this huge global industry?
I think it further grows. It has two reasons for it. One is, you know, when I finished university in St. Gallen, was young, and all of us, the only thing that we were thinking of is making money. That was 30 years ago, right? Today, sometimes I'm on the board up there, so I'm there a lot. Today, the millenniums, it's not only making money, it has to have a purpose. which I think is great. So the whole world is changing. And now what you're seeing is suddenly what I said before, institutional clients are shifting as well. Boards are telling we want to have sustainable investing. So I don't think this is just a fashion. It's something real, here to stay, and also needed, because if I just look at the whole global warming and all of these things, you need to have to steer your investments not in coal, energy producing, you need to go in solar. And actually our highest returns on the infrastructure side are solar, windmills. And funny enough, when we started doing infrastructure some years ago, many of our institutions were like, hey, isn't that risky? And now after they have seen the returns, after we have invested over 2.2 billion and quite a lot of money back already at very nice returns, suddenly say, oh, give me more, give me more. So it's here to stay, I think.
There are obviously also a lot of risks for investors in sustainable finance, for example, a lack of liquidity, not enough criteria as well. Then the returns are relatively low compared to other financial instruments. What are the biggest risks and challenges that you are seeing?
Now it always depends again. I have to talk about social deep impact. There the returns are decent, maybe not as high as because you're investing in Africa and then you're investing in regions where the political currency risk is much higher. There it's partially we underwrite on market returns. I think here we need much more public-private coming together, that these big DFIs or whatever actually give you kind of a guarantee, a minimum return, also 30% downside protection, which is more the political risk and the currency risk, because our clients cannot take this risk. An institution cannot take this risk. When I look at sustainable investing in general in the Western world, then these returns are not less. Actually, the opposite. A company who is sustainable is in a downturn again more sustainable, because usually their cash flows are more secure. If you do healthcare, if you do, as I said, renewables, this will stay, they will not go under. Whereby you have certain other industries, the whole oil market is very recession driven. So I would even say the opposite. Such a portfolio is more resilient for downturns.
Very interesting. How do you see Switzerland as an impact investment, financial hub in the future? How can it cement its position and grow stronger?
Switzerland has a long history from the country itself, but also from companies who have been started here on the microfinance side especially. I think the biggest microfinancing companies are all in Switzerland, including ourselves as well now with PG Impact. So that's definitely a good space to be. And what I said before, the millennials today, and Switzerland is known for private banking. I hear from all the private bankers, the senior guys there, the kids now of the rich people, they don't ask only for returns. They ask for what is the impact, which their parents have never asked. And this will shift. You will see a big shift in Swiss private banking towards, and everybody is now building it up actually internally, towards impact investing.
What does that mean for the change and the shift in business models and education of people and demand for university students, etc.? I mean, these are huge structural challenges as well, or do you think that this trend is going smoothly?
I think it goes quite smoothly. I mean, you see the younger ones who are coming out, they I have great people going to PG Impact knowing that they might earn less than what they would do in Partners Group, the other company, but they see the purpose as well. So you see a lot who actually want to do this. And overall, I think the world needs it. It's if you want to survive in the long term, we will have to focus more on sustainability in general.
Before we go, Urs, what is like the biggest trend that you are seeing for impact investment over the next 5 years now?
It's difficult to say. I mean, it is not one trend. That's the beauty about it. You see them coming out as mushrooms. Or as I said, you have affordable housing is a big market suddenly. Then the whole solar off-grid, small solar plants, financing. The whole renewable part is huge in infrastructure. So you have the whole range. I think the most difficult one to crack, I think, unfortunately, which is sad, is education. Because education, suddenly governments want to own it. And when you get too successful, there has been a very, very successful education system in Africa. Gates Foundation, others were behind it. We almost invested. Luckily, we didn't, because this company almost goes under because they were too successful. And now governments come in and they don't like it, local governments. So that's maybe a sad, but it's true.
Thank you so much for your time, Urs, and I wish that your investments in the future will have a lot of impact as well.
Thank you.